Welcome back to my YouTube channel. Today I'm going to talk about what to buy before budget. As you know, the final budget for fiscal 24-25 is scheduled to be presented tomorrow. And today afternoon, economic survey shall be presented. But before that, it is very important to understand from the trend that where you should stay. Should we continue buying in defense and railway, or should we change focus? All these questions really becomes very, very important. So, before I proceed, I would like to mention that investing in the stock is risky. So, before taking any investment decision, please do consult your investment advisor or do your own research. Purpose of this video is purely educational and for discussion. So, let's get going. As you know, this year, in the last election in 2024, the Modi government could not come to absolute majority of its own. Instead, it came to power along with the NDA. Nothing wrong, but when the government was only BJP government supported by NDA, it has a different rate of decision making. Decision making has to be very fast. In today's context, it cannot remain as fast as it used to be there earlier. Obviously, they have to, or the PM has to, listen to the aspirations of party like Janata Dal United and Telugu Desam Party, and also the people of India who has not given them a very clear mandate. So it has a message for them. So how it is going to be? So before we proceed, I think as we know, this government, all the ministers are continuing and all the policies also will continue. But in the change scenario, there will be some change. So let's look at what to do from investment perspective. So I'll take you through the first thing. Like very important here is going to be fiscal deficit. So when you look at the fiscal deficit, the government when it took over starting 14-15, the fiscal deficit was much in control. It shot up during the COVID, and since then government is trying to continue improving. So it is somewhere deficit, if it is 5% or low, it will be a very good budget. That is what government is to do, tends to, and it will continue doing it. So I think let's hope that it will not be a very populous budget. It will not be a budget which is having a lot of measures in terms of supporting at the cost of the economy, and at the same time, two things which we are seeing in economy. There's a huge food inflation. So when you go to the market, all the government keeps on claiming that inflation is lower at about 5%. Overall inflation may be there at 5%, but the one which impacts all of us, which is food inflation, is really touching the sky. It could be in the range of 9% or so, whatever. So I don't want to get into the nitty-gritty, but it is certainly there. Second thing is rural unemployment. So unemployment government to address, bring some scheme which really gives more employment, and that will drive the budget. Third thing is there have been a stress in rural economy. So a lot of allocation has to be done towards agri and really stimulating the rural economy. So these are very important. Also the railway and defense, which has been as a priority sector for government and infrastructure, the spending will continue. But even though spending continues, is the shares going to see a lot of difference in that? So let's look at defense sector spending. As you can see from here, defense sector spending over the years, the blue, dark blue is capital expenditure. You see, it has really multiplied many times. But last two budget, the change has not been so much. When you look at the defense shares like HAL, you can take BEML, you can take BEL, they almost have multiplied 3, 4, 5 times in last 2 years. So now at this valuation, it is really stressed. So even though allocation, this priority continues, but are you going to see the same rise in these stocks? Obviously not. It will become stable and grow at a very normal pace. So growth could be, if you buy at this price, growth could be 10%, 15%, or not more than that. So obviously, when you look at the railway stock, look at the railway expenditure. Last two budget, they have been a huge difference in railway outlook. So in 22-23, there was a outlay of 140,367 lakhs crore, and in 23-24 interim budget or provisional budget which got presented in Feb, it was 240,000 crores. So it's a huge this one. And railway has also had a lot of rallies. Railway stocks have multiplied many times. But here, personally, I see little better opportunity than defense, because still the railway thing will continue and the allocation might even increase here. So from this perspective, should be getting to railway and defense, you should be very, very careful. If you are holding the position, stay with that. Or you can do partial profit booking also, and then watch out for what is happening. So if you do partial profit booking and the prices fall, you will make some gain. And coming back to the other sectors, so what are the other sectors where we can? So I think I am very bullish on a sector like IT, which has not seen movement in the last 2.5, 3 years. Recently start moving, so IT could emerge as a defensive sector. Second one is the consumer, like FMCG, fast moving consumer goods, where the HUL, Britannia, Nestle, Tata Consumer, Godrej Consumer, these companies fall. Because rural economy, they have been a stress in demand, and when government gives some stimulus, this sector also will move. And interestingly, last 3 years, there has not been a huge movement in this sector. The sector is almost a standstill. So from this angle, FMCG, IT, these two could be sectors which can emerge as a very strong defensive sector for investor portfolio. So if you are holding stocks in the sector, sit tight and keep on adding if you can do. Third one, which I see personally, is the agri business. Like there has to be a focus on agriculture, looking the result of the election. So therefore, agri sector, company like PI Industries, UPL, etc., may see a good demand in years to come. So personally, when you look at the valuation, PI Industries, I hold in my portfolio, and PI Industries, I will try to take you through the valuation. And PI Industry today is trading at 35.5. It has got a decent ROE of 21%, and sales growth also has been very decent in the last 3 years, 18-19%, and profit also has grown about 31.6%. When you look at their price thing, like if you look at the price of 3 years, it is almost flat. Very little growth in price in 3 years. What it means? Has the earning not grown? Not true. Look at the earning. Earning has been going up and up, and P ratio obviously has been coming down. So P ratio, if you take a 5 years average, P is much below than the median P of 47. It is trading at about 35, and so is the case if you take the 10 years P average. So from valuation perspective, see how the performance or quarter to quarter profit has been growing and P has been declining. So, and then when you look at this more data, you look at the compound profit growth in 3 years, 32%. What is the price growth in 3 years? 8%. So there's a huge gap between profit growth and price growth. Keeping the fundamental in mind, and also the government policy which is likely to be there to support the agri area, I see a very good scope for PI Industries in years to come. So friends, what I discussed in this short video today, I believe that railway and defense and public sector things will continue growing. But since there have been a huge run-up in these two areas, you may hold on and sit tight if you have something. You may also like to book partial profit. In terms of adding, I am not personally in favor of adding stocks in railway and defense at this price actually. And I think you will get time, you will get chance to do it at lower price. Maybe you may like to consider that time. Coming back to which are the areas where we need to add, it is IT. So you can buy IT main cap like TCS, Infi, HCL, or mid cap, because mid caps have a a chance to grow faster. So even mid cap stock like LTTS, L&T Technology Services, and other companies you can buy. And then second thing is consumer oriented FMCG type of stock where HUL have a very decent valuation. You have Tata Consumer Services trading reasonably good, and you may have company like Godrej Consumer. All these will do good. And then third, to my mind, is agri industries. Those companies which are supporting agri, you may have more companies in that sector. You can do research on that and then add that today or maybe during budget tomorrow before it gets down. I hope you like this video. So if you like it, don't forget pressing the like button. Circulate the video to your groups so that more and more people can be benefited. Thank you so much for your time. Jai Hind, Jai Bharat.